the one you showed us.
We'll do more of lower time frame analysis. I think I've taught us well on the higher time frame bias as well. The lower time frame is just is important. Let's say you have this point here. You have this point here too. I've always told us market will not just run straight in a straight line to this zone. Are we getting it? Market will need to move in a wave-like form, impulsive push, little correction, impulsive push, correction, like that, till it gets to this point. And even as market don't reach this extreme now, so the trend is still bullish until this origin here is violated. See where market come from, that was the origin. See where market reach terminal points. Are we getting it? Even as market don't reach here, all these ones we do are counter trading, counter trends. Till you see what's it called, a full candle close below the origin of that buy, this trend is still bullish. Are we getting it? So market fee comes small. Even retrace like what's it called? We have a light retracement, we have deep retracement. Light retracement fee all come, you not even reach 50% of the zone self. Continue the bullish market. Then deep retracement, now fee come back this origin again. Continue. So till this your origin, you have a candle close below. Don't remove your mind from that trend. Say, okay, the buy don't finish, sell don't start. You can't decide for the market when to change bias. Are we following? Huh?
Yes.
Yes.
Good. So
Yeah.
the fact that we will sometimes what's it called do some counter trading doesn't mean you now extend your TP to the extreme. If you not hit TP, if you not hit TP because you are still with a counter trade. That's just the truth. So what we do most times is you wait now. This last impulse correction, impulse correction, impulse. This last correction leg now you gotta wait. Once market take am out finish, you wait for a little retracement. You join the sales. And this your sell now, your target should not be too far. All this correction, all this origin of the import, just find the closest target and leave them. And I want to tell you, say, take 1 to 4. Market the reverse most of the time, 1 to 3, 1 to 4, 1 to 5. Take 1 to 4 and leave. Then when the trend is setting, you fit do anything you want to. Are we getting it? So rather than say market don't move in your favor for
Yeah.
close to a mini arrow, before you sleep, wake up like me, it don't go take you out. It's not nice. So always understand, okay, the market is moving. Where it go stop, you are not so certain. Like if you check BTC, you check BTC yearly charts now. Let me check 3 months. Okay, 3 months not go show much. 3 months won't show much, but let's see. If you check, good. If you check BTC yearly charts, I told us early this year before, say, from which I dey see crypto time that they won't finish. See am here. See the T candle here. That's the low. And this low now, what's it called? It's around 38K. 38K. Then this high now is at what's it called? 106 or whatever, blah 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 blah. I don't know. So in as much as if you look at this stuff now, the market has been bullish. Come up, impulse correction, impulse again, correction, impulse again. Now correction leg we did now. So the fact that you don't know, so okay, you just see green candle, you've seen a green candle, you don't see doji, market market must sell to take out this thing. It's not setting, no, the trend is bullish. Are we getting it? The trend, this trend is bullish. So the fact that you know your doji and your three candle formation, once you see a green candle, see doji market, the idea is market to sell and it might not happen. This thing is all based on probability. So in as much as the trend see dey bullish now, so you just got to careful, dey follow am small, 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 small. Then anything counter the lower time frame, you just do small, what's it called, small target and leave. Are we following? Good. If you check
Yes.
it now, you had this impulsive push here, a correction, impulsive push, correction, impulse. If you pick your Fibonacci now and drop, you'll see and now say this thing now is not a very deep retracement just yet. Fibonacci 2, I never set this thing. Fuck. Okay, it's manageable. See, this one now dropped to what's it called? 0.5. People that trade Fibonacci now do they buy already for you because this one now they call this one golden zone. In between 0.5 and 0.6 now golden zone with this. And checking the previous candle, you had a nice rejection. People now that they buy already for you. So, but if you go with the yearly time frame now, you call the wait, okay, BTC need to drop on 38K before I go buy. You might miss the trade. Those are the things you need to. The fact that you know or you studied something to okay, this thing the what's it called? You go buy for this other place. You know me say market must buy. That's the point I want you guys to understand. It must not do what you what's it called? What you want it to do. Because you saw because you saw that pattern play out before doesn't mean it will play out today. Are we getting it? So from this monthly chart now, the same thing, impulsive push, correction, impulse. If you check here now, see this red candle, now it cause this push. Nero, you don't see why I mark that candle. When you tell me, say, if I adjust them, if I touch, blah, 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 blah. The candle when cause that break below, most of the time, it always act as point of entry. So here now, this is the candle that caused the low. The what's it called? Now it caused this final whatever break all this low. You mark it as your point of entry. So mark another the reacting side already. But if you come to this, if you look at this thing properly now, the market is still bearish on the weekly time frame. What do I mean? This high don't go. See your normal good impulse, correction, impulse, correction, impulse. This last low now is gone. We had this drop. This high was taken. After this one drop, we had what's it called a flag formation here. Let me go to make a show on a basic, not be basic per se, but let's do normal what's it called today. Make a show so that you don't trash all your previous ideas of trading because you just have the SMC. What's it called? The bullish markets. This was a double bottom. Abi W now. It came up. Gave you a flag here. Bullish flag here. Continued. This one be like correction pattern, exactly. The same correction pattern here. I think bullish wedge now. I don't know the name again. Continued. Then we saw this after this high were taken. We saw this push to the downside. You had your first correction leg here. That was a flag. Market drop. So once a reversal is confirmed, look for your continuation patterns to go down. After this flag happened, what can you see? Market sold. Another correction again here. So this move currently, at this set is in a still correction. That buy not really dey pure for me. Would you say I'm happy? So na very simple. The fact that you've learned your advanced stuff does not mean you trash all your previous ideas. So this trend now is still bearish to an extent because when the higher time frame is bearish, then it never give you any better reversal, what's it called? Sign just yet. But the point I'm trying to make is that once you do see what's it called your which are the talk safe. Good. As I was saying earlier, till till the origin, see where market, this push now is coming from this zone. See the first push that broke here. Till BTC comes below 17K, you see bullish. Are we getting it? Now, who buy late, now go dey cry by. Now, let's say you got in at around 100K, you dey cry currently now. The person when buy BTC at $10,000, 20K, even 51K, that's still in profit. So the fact that it's selling now does not mean the trend has changed. This one now you'll be like counter trend, the pro trend is still bullish. And if you pick your Fibonacci, I don't know Fibonacci before. If you pick your Fibonacci and draw, that's it. This one came up to this one came up to the daily golden zone. Buyers they already now why the reactor is over it. Those buys might not be for long. No, will be for long. So your lower time frame is just for you to find your structures for you to feel engaged. We look for your three candle on the higher time frame. We look for your what's it called your LTF structure on the lower time frame. LTF structure might be once you've confirmed the reversal might be either of your T candle, then a doji form above. Once this one is confirmed on the higher time frame, okay. Along these roads coming down now, we look for your sell pattern. That's your structure. So you must not be on the higher time frame every day, and then you are not supposed to mark your structure on your higher time frame. Your higher time frame story now just to check, okay, see what in the last 2-3 candles do. We are not to mark structure on your higher time frame. So most of them they always want zoom, they always they check this left side narrow. You they very particular about it. You always check the extreme. It's not nice. If you look at this whole thing now, it's bearish already. You don't need all this. You just needed to check, okay, what the market they do. What the market is doing, the market is bearish. One. Two. Once you don't get the bias finish, simple something, you check what candles when sweep the next candle. You check it now. This one took these previous candles high. You know, okay, market up commodity side. The chance of market coming back here now is slim. You continue. Which candle? Say if you look at these ones properly now, this one now took out this one. If you go lower now, you'll see entry for there, but market would not pass all those sides. So let's continue. Now and now is gone. You check and no one collect the previous high till we got here. This one now the same thing. Are we getting it? This one now so now we see the waka. Check here now. This one now swap is high. This one now they tell you say okay, most likely market not supposed to come all this up soon again. So your idea now should be focused on these lows then. Here, here, here. You don't need all these ideas, all this data, you don't need for now. So focus on the most recent, if you're on the weekly chart, check waiting last week do. Okay, if you check this one now, last week now, what's it called? This one now swept these lows. This what's it called? This low. Go for here. Are we getting it? This low. This low was taken. This one now can be your tick candle now. This one now can be your doji. Just judging from this weekly candle here now, what's it called? This one sold. This one, what's it called? This one TP, that they met. Because this one acted as a doji that took out this high. This was the low. It already taken already now. Then this one now can act as your doji now that took out this low. So your TP now should be 73, 75K zone for BTC. Will you follow me? Once you've seen this in all the weekly, the same thing, you switch to daily. If you check daily, but switch to H4. Find your structure. See am now. This one here. This one took out that low. What are you looking for? impulse, correction, impulse. Once you sit down and finish, what do? You mark the extreme candle. Why I call miss that trade? Why did I miss it? Okay, see where the fine entry. Sometimes they okay, no. This was the previous week. Okay, yes, this was the previous week. Good. I thought us I showed us this one the other time. Yes, I showed us this one on that time. Then I wanted I and the re-entry here that never happened. But we understand what I do so. Huh?
Yes, yes.
Yes, yes.
Good. So you don't need all these what's it called? All these plenty data. You don't need them. You just need to focus on waiting the current price action they do. I dey always shout recent data, but you guys still have a way of making me angry too. Now they always want do wetin dey on mind. I go tell una do A, now go want do wetin dey on mind. Sometimes I go talk, but sometimes I don't feel like talking seriously. If you see check this daily here now too, what can you see? This one did not sweep any candle, but this one swept this previous one. Automatically now, you don't need to look for any POI below this low. It all goes on they call till it not they come back again. It's not coming back. So if you sabi, I don't want to talk much, but if you all of now that is sabi SMC now. So if you check this what's it called? This push now. So we had a nice close here. That's your structure, break of structure there. Then in between here and here now, that's your fair value gap. So for your continuation trades now, you mark this kind of zone. Are we getting it? So you just anticipate maybe tomorrow, next tomorrow now, BTC can sell a little from this block now. It can sell a little from this block into this zone, reject to that higher time frame zone. So once you don't mark this end zone, it's just to wait. You don't need to do much. It's just to wait. But if you can't go your H1 now, they go mark impulse, correction, impulse, you go wait tire. BTC will not come back. Because if you follow your what's it called your higher time frame story now, this what's it called this Saturday's low is taken already by Sunday's candle. Then Monday now close above, telling you okay, this is a bullish price action already. So what if it be say small sales can happen from this candle here? Small sales can happen. Small sales can happen. And if you check this out, you see your impulsive push, correction, impulse. Here again, impulsive push, correction, impulse. You don't see hammer now, you want sell. You go sell small, reverse. Because the what's it called the most recent price action now, don't they give you bullish story already because the previous day's low is gone. Then the candle closed above the tick. Position a bullish price action with this. It go dey a little confusing, Shabe. Just try and follow me. Huh? So for BTC now, na just to wait. You don't need to come back here for anything again. You don't gonna miss trade already. You wait for BTC to come to this zone. You can see refine your FVG now to this whatever. If you come, fine. You not come, you let it do. Look for another thing and trade. So your lower time frame, let's say market day, let's say we have this zone there. We have this zone too. Eh? Your what's it called? Your daily candle fit just be one candle. But if you go to your H1 now, your H1 now will need to give you 24 candles on one daily chart. So the 24 candles now will not move in a straight line. The 24 small candles now, so now them will give you this price action. 1, 2, 3, 4. Inside one bullish candle. If you go to the lower time frame again, you'll see the same structure. So your duty now is just to make sure you see 1, 2, 3. Impulse, correction, impulse. You mark this one. Then you anticipate what? Market coming to this one. to trigger you. Immediately this one, market not gonna come back or trigger you. As e give you another two again, you continue like that. So you got to follow price as e dey go up. Una go dey always dey mark extreme, 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 extreme most of the time. It's okay to mark extreme, but most of the time, price might not come back. That's just the truth. But anytime it's getting to that extreme point, not trade again. Anything from halfway, you can find what's it called entry. But if you don't reach close to that, what's it called extreme points, not trade. If you check what's it called, euro, okay, I think euro USD. We check euro USD, the monthly, what can you see? Monthly has been good. See, I'm now the same thing now. It's 3 months. I'm coming, I'm coming. Okay, fine. See, weekly has been selling since. If you check now, this low is gone already. See, get this week for here, shall. But if you draw your Fibonacci, this market came from here. Draw your Fibonacci now. We are close to 50% of the zone already, so you can anticipate reversals. That's fine. But always look at your recent candles. What can you see? You zoom this thing properly now. You see that you had a thick candle, a doji formed. This one. This one doctor is okay. This week now, I can anticipate bullish structures on the what's it called on the listing. And what can you see? See here now, you had a sell, what's it called? Impulsive push, small correction. Market does not just run straight. If you check here now, you get small FVG for possible sell continuation here. Judging from the bearish storyline now. So you can anticipate these buyers now coming into this zone to continue the sell. So once you don't get your buy entry for here, exit before you enter this zone. Then you look for reversals inside here to continue selling. So most times when they mark place, not be say we dey mark am blindly, we dey mark am because we know say okay, reversal say happen for so point. But not be say you dey so certain, you just draw am. Then once, sorry, okay, let's talk about this one now. You don't see your T candle, you don't see your doji already. You just see your next candle. You can still check your daily to know what daily they do. You check your daily, see this daily, don't take out this one already. So the chances of market coming below that low now, say now they slim again. Because on a normal, if you go with that time frame chart from weekly now, as you see this about weekly now, you have to switch to H4 directly. Abi? Sure?
Yes,
And
yes,
if you
yes,
check your H4, if you check
yes.
your H4 now, you need to look for your impulsive push, correction, impulse. Once you just see them, you find this extreme to trade. Most of the time, price will not come back. Then talking about that deep retracement and what's it called I just told us earlier now. So you pick your Fibonacci tool now. Measure from here to this place. Anything make market up come this 0.5 zone already reject. The chances of it coming below that low is very slim. Would you follow?
Yes.
So sometimes
Yes.
once you mark that stuff on the what's it called? Once you see that thing on the weekly chart, still check your daily. Don't just run to 4 hours. Check your daily to know what daily they do. Okay, now Francis, I don't show these kissing candles and that. I don't want to talk much of this class. I don't want to talk much. But I will cause problem given that. But if you look, hey God. Okay, Francis gonna understand, Justice gonna understand, and maybe Francis gonna understand, Foster gonna understand, Justice suppose understand small. See your kissing candles here. This candle close, this one open, abi. See am here. E don react already. E don say sweep this candle low. So technically, see here price will come soon. So you not get anything to the mark point of interest for this extreme again. From here now, you can switch to your 4 hour or what's it called? Switch to your H1 and map your structures now within this zone. What do we have there now? You have your break of structure already here. Have your break of structure there already. Then possibly you can pick this one, pick anyone. Then you pick this extreme now as your entry point. You understand? So you don't need to wait for this extreme again. Hmm? See an impulsive push now. Correction, impulse. You wait here. Are we getting it?
Yes.
We're gonna talk
Yeah.
now. Like this one now, I did this market already for years. So this one, I did this market already. But I cannot show you people, I cannot explain that one for you people now. But if you look at this thing at the same thing, impulse, correction, impulse, and I just small trade here. That was the last candle that caused. Damn there. That's it. So always as I tell them, I see them now. Impulsive push, correction, impulse again, correction, more correction, impulse. So you don't need to, what's it called? You don't need to wait at the extreme here now for your trades. As he give you another this thing, you follow and they go like that. This one is nice impulsive push now, correction, impulse. If I didn't come to this time frame now, you go there, yeah, now they wait for this extreme. So sometimes be flexible. Hmm? Be flexible.
Yes,
So
boss.
that's just it. Do you have any questions? Huh? I think we dey wait for AUD card now. AUD cards. I think so. We wait for AUD cards. Wetin I see when me mark that thing? Can I remember? Can I? Okay, okay, yes, okay. Aish, no, 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 no. Abi? Okay, this one was here. Your doji candle. CP don dey met already, sha, but since na weak rejection, price might still go back. Might still go back. That's your weekly. Check your daily. Wetin your daily dey do? See the same thing again. Daily don take out the previous day's low. So the chances of price coming below this FVG now good. It's used already. This FVG now is used already. So price not get any reason now to come down, 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 down again. From daily now, you switch to your 4 hour, whatever to look for your distance. Price will not come this down mark for 2 hours safe way. Price might not come there, oh, seriously. But for me to trade this block, I'll need this high to go. If you check line chart, it don't go sharp, but I'm not trust them. See, the check line chart is gone already, but I don't trust it. So I'll wait. It's either one or two things will happen. If by tomorrow, say this high never go, we'll trade this block. Now let's say we wake up, say this high don't go. This extreme price will not come back. Yeah, I'm certain. Then we'll trade from this block here. Because now this leg now will now be your what's it called? Impulsive push. Correction now. Impulse. So you don't have to be stuck to one particular point of entry. That's the point I want you guys to understand this evening. Now is a what's it called? We have the extreme point of entry now and the decisional point of entry. But this decisional now needs to take out this high to validate it. Do we get? Hmm?
Yeah.
Yes,
Any
we do.
questions?
You.
So
Okay, I
it's
have a question.
always
From the last study we had, I wrote it down that for SMC condition to be met, we need to have two break-off structures. Then we look for the candle that gave the push. So
mm-hmm.
that's why what you're teaching us now is that we just need impulse, correction, and impulse,
Nice to be a break of
meaning
structure.
one just one.
See this. If
Yes,
once a candle close above, that's a break of structure now.
yes.
That's a
I was
break.
thinking supposed to be two break-off structures, then you go to the extreme and look for entry.
Not the same thing. Not confuse yourself with the
Okay.
same thing. Now just grammar.
Okay.
But in as much as you don't get three break of structure, price might not go to that extreme again. Imagine I don't get one break of structure yet, I don't get two. If this one never happened, this point of entry is valid. Just like here now. I have just what's it called? One, two, three. This one now is valid. But anything make you sleep, wake up now, say, here, don't go. No need for here. You trade from here. So that's it. Once this one happens like this one happen now, you switch here, you trade. Once it happen again, you move. That's it. Ah,
Okay.
well, any question? We're almost time to finish. Oh. Okay. When I go night, maybe tomorrow if I'm chance to host. If I'm not chance the weekend. Yeah.
All right. Thank
And
you.
I'll take it.
All right. Thank you, bro.
Okay.
Thank you.
Mm, mm, mm.